Welcome, Auvorian subscribers, young and old, worldwide. Steve Vetterl on the microphone. Today is the 5th of December, and it is cold in SoCal this morning, let me just tell you. But I know we really can't complain. So I am the CMA for Auvoria Prime. I consider my role very important as your risk manager. We've had some crazy movements in the last week. We're going to do a deeper dive into that. But first, if I may, let me see if you guys can hear me. And let's double check the screen sharing, please. So if you want to put something in the chat window that I'm broadcasting okay, that would be great. Before I rattle on, and there's no mic, which I have a tendency to do. So, okay, trading the foreign exchange markets carries high risk, may not be suitable for all investors. Trading on margin and utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange markets or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, levels of experience, risk tolerance. There is the chance that you can blow out your entire account. But the purpose of our developer calls and the tremendous amount of education that we offer at this organization is to help avoid that. But there is always loss potential in anything in trading, regardless of what you're trading. Trading classic cars, you can lose money on too as well, folks. I have a great story I'll share sometime about a buddy who just got absolutely clobbered at a Mikomoto auction. So it can happen anywhere. So Auvoria Prime does not have any recommended settings. If you're sharing any of the results, which is really only allowed in the Facebook groups, I noticed that people have been posting some pretty good stuff that carries over to Telegram, which is actually kind of cool. Please do not use the term company recommended settings. So we don't have any recommended settings. We're not a financial advisory firm. We just license software that users can use however they want at their own risk and discretion. It does come out of the box with default settings, which can be adjusted. And I can tell you single-handedly, almost every single one of the emails that I've received over the last 6 months from somebody that is just getting terrorized in their account, and many of it is older versions of software, not the current stuff, almost unequivocally, these settings have been wrong. They have been too aggressive. They have not been managed. The pairs haven't been managed. And as hard as I try to get the word out and sort of cast from the mountaintops, if you will, which is beginning to sound a bit old and need a new one, some people just still don't get it. So, I try to have some sympathy for that. But when I get these emails and I, respond back always the same way, do you have an FX book? Can I see the settings? It's always the same thing. Oh, well, I just took the settings that my upper downline guy recommended, which wasn't what you or the default settings were coming out of the box. So please do not fall into that unless you are one of the people on this call that is an expert that can afford to lose some money. Although I wouldn't suggest pissing away just on crazy settings. But the majority of our customers, they'll put a few grand, maybe more, maybe a little bit less into an account. And I think it's important that you understand demo is really a good thing. As I joked in the old days when I was coaching lots of students to learn and trade the futures markets many, many years ago, I always said your simulator is your friend. Okay. So it's another word for demo, basically playing with fake money, but real trades, right? So it is absolutely your friend. Consider it your best buddy. Don't be caught up in FOMO, which is fear of missing out, and or impatience to go live. Test it out. I'm still running demo. Demo is still my friend. I have a bunch of buddies. So I'm sharing settings and the software. Again, keep in mind, for some of our new, we've had a lot of new subscribers come on board. Auvoria has nothing to do with your brokerage account. We don't recommend brokers. We don't get into, we can't see inside your account. We can't trade it. We have no access to it. None of that stuff. But there are some fantastic Forex brokers out there globally, albeit the list is small. But please consult your up and downline folks to get those good guys. So let me close out here. I'm actually going to post this in the chat room right now. Here's a link. Let's make sure it goes out to all attendees. There you go. It's a presentation I did for Investors Expo. These guys have been bugging me for years to do a presentation. I do want to thank Ryan Doktorzik and Susan Beltran for helping me tremendously put together not only the slides for this organization, but the presentation itself. Content. Kanoa had a really big role in this as well as Derek Alexander. So, gentlemen, thank you for helping it go off swimmingly. Anna and the team at Investor Expo were pumped. So you guys can check that out. Probably a few nuggets in there you can pull out. This is my first attempt as the captain of our analysis ship, if you will, here at presenting from that standpoint. So I've got a few things I'm going to change up on some of the slides and so forth. But if you guys want to give me any feedback on that, much appreciated. All right, let's get into the Forex calendar. Let's make sure we're sharing the right screen here. There we go. Forex calendar, December 6th through the 12th. Christmas is coming up upon us pretty quickly. And I haven't bought any gifts yet. I'm a bad husband. Got to work on that. In any case, we have not a lot really going on, honestly, through Sunday, Monday, Tuesday. Typically, as we enter the latter stages of December, most of the big meetings that would influence any kind of monetary policy from a central bank standpoint are kind of past us now, including the jobs numbers last Friday, which was kind of a poof out. No surprise, lockdowns are back upon us, especially in the draconian state that I live in, California. But in addition to that, the European ECB press conference is on Thursday, so do understand that could have an effect on the euro. Heck, it could have an effect on the US dollar, which has been dropping like a rock, and all the European currencies have been increasing, which is not fun for the Eurozone, obviously. They always have a tendency to do better when their currency is weaker. It has a lot to do with the flow of capital in and out of the country in terms of GDP. If you want to look back on any of that, you can look back to my Telegram channel for that. So also, I do want to make sure everybody is subscribed to whichever software they're utilizing's Telegram channel. So if you are not on Telegram, let us know. We can get you the links to Variable. We can get you the links to Gearbox. So my non-negotiables for subscribers are the following: Telegram on your phone, alerts turned on for just the channels that are your so here, let me just drag this in the screen so we can all be on the same page. So here's what we do for our team. So I kind of run a Stalinistic team because we want to make sure everybody's safe. But here is the Variable channel. Hopefully you guys are seeing that. Here we go. Note that this is the Telegram channel for Variable, and then Gearbox I'm going to show you next. But if you do subscribe to this, note that on Friday, which I post in my weekend notes, I post the same thing minus these news statements here. But we now have live FX books for both accounts that have been set up by Dasan. I'm going to be following along as well. So you guys can follow along, bookmarks these dogs right here. I'm not going to get too into that today. So as Mariska just posted, all Telegram channels can be found in the product setup modules in the AP Academy for each product. Please, on with your team. I require almost literally, like the last time we got together, our team, which is me locally and about 6 other trader buddies of mine, I actually made them show me that they had the app on their phone and that the alerts were on, so they could see that the Telegram dings are coming through from both AP Corporate, Variable, obviously my channel, and obviously which other channels you want to follow, including Gearbox. There is no channel for Einstein and Alexander at this point. So get that all straightened out. Hopefully that is redundant information to everybody. So that is all the statements I want to make on Forex Factory. Let's get into charts. Let me make sure we're sharing that screen. So this is TradingView. This is our ChartEPU system. What you are looking at is the S&P 500 over the long period of time. So the reason I've done this is because I've decided to overlay a new technical indicator on here, which has become quite useful. It can be accessed via these little lines here, clicking on, adding fixed range volume profile. So this is something that I'm fairly well known for in my past life as a coach in the futures markets. This is an exceptionally effective technical indicator. Why? Because it actually aggregates volume in the form of a bell curve, which I'll show you next, or a market profile chart, and you can see where all the volume executed. So it'll set what's called a point of control or a point of center or contact, whatever you want to call it. We call it a POC. It is the red line that you see here that is the center point of the highest amount of volume over the entire period of time being measured, which is the beginning of 2018 to now. So I usually recommend from a large or big time frame standpoint, if you're going to overlay market profile on your charts, that you pick a decently large size time frame. Now, yes, it's hard to see these candles because we've essentially stretched it over the whole period of time. But the only thing I really care about is the value areas, which you see dark shaded, meaning that these are where most of the participation in trades took place. I'm only showing you this on an S&P 500 chart. That's because the exact same type of analysis we can carry over to any currency pair, including the dollar, commodities, currencies from both majors and minors. So it's a cool little tool. And I'll show a little more. Then you can overlay, as I've done here, additional smaller windows of time, right? Like you see here, this box in addition to this box. So this is normally the really great thing about this, and heck, I wish I had created something like this TradingView, because it's just storming through the trading community, which is great. It's also super cost effective. That's the thing, just blows me away. So in the old days, this kind of charting software cost you a couple $100 a month. So I really think this is a great way to go in the pro version of this, which is I think it's under $20 a month is what I pay. All right, so let's take a look at the dollar. Now, I don't have market profile overlaid on this because dollar's volume isn't as relevant, but let's take a look at a daily chart for just what's going on. So no surprise to any of the watchers of my weekend and or weekday calls on this stuff, from an analysis standpoint, we've been looking for the dollar to break lower. And it was signaling essentially with some weakness that it was going to break lower. So we've broken. It's been straight down. You can see why I recommend this is why I recommend that usually, and these are daily candles, each of these represents one day. Let me just see if I can make this larger. Whenever we have a break from a long period of what's called balance, really what this is, a balancing or a consolidation period, some of it will call it, or essentially the market's just bouncing between small areas, you usually have a fairly protracted move. And we could have a much more protracted move as well. There's a lot of longs that I think are being caught with stops that are being run in this area, as I've mentioned many weeks past. It's difficult from the standpoint of a martingale system. I know that almost all the types of software that focus on this are taking trades because things are getting stretched, essentially stepping in front of the freight train, right? Like basically buying longs down here. But statistically, when you have a break and a pattern that starts to trend one way or the other, for that matter, could be going up if it was breaking up, you statistically have a much more significant percentage win rate taking trades with the trend and not against it. Okay. Doesn't mean you can't do it. Doesn't mean software can't be successful at that. I'm just telling you statistically, it's a fairly significant advantage. So just know that. And I know a lot of the algo guys would argue against that because they'd say, hey, no, it gets stretched. We're, pushing down towards the standard deviations of 1 or 2 in some cases. At some point, I'll overlay those standard deviation lines on here and or Keltner channels. So eventually you guys will be all experts in this, and you'll understand where areas of what they call multiple confluence takes place, meaning that significant areas of not only support and resistance, but moving averages, volume profile, Fibonacci's, wave analysis, there's a bazillion types of technical analysis, but when they all sort of line up in a given area, right? And most importantly, it's support and resistance, right? And you'll see that because that's primarily what I show. I probably should get rid of this green line now that we broke. So let me delete that. This is not really that effective right now. There we go. I guess to the latter degree, I keep the black because I still think my black's better positioned here to support than this indicator here where you see the orange and the yellow. This is the squeeze zone indicator. This was actually built by Dasan. Can be overlaid on almost any chart and trading view. In any case, we broke. Looking at the opposite of that, let's go to the euro US dollar. We've broken higher. No surprise. This is almost exactly the opposite or inversely correlated chart, inverted, if you will. Same thing to be the case. So if you have a lot of how should I put it? If you had a lot of alerts coming in and trade requests hitting your smart devices, right? It is difficult for one to say, even if you're a fantastic trader, for one to say, okay, well, I'm hearing what Steve's saying, but that means, do I not accept other trades? Do I not? I mean, when it first breaks, as we tested out a couple of candles here, then we had a huge lift, where there's pretty good volume coming in. That's an example of where I just personally, I wouldn't be accepting short trades. Or if I was trading the GBP USD, which chart looks similar. So here's that as well. Again, breaking. You had a peak above it. Notice we came back down to that resistance red line here, and it bounced right back off it again. See how solid that line has been? I mean, you can just carry it over and it still applies. It's a very effective if the price has spent a number of periods of time consolidating in that area. It's a much more significant breakout one way or the other. Doesn't mean that some crazy event can't come in and completely send a swing in the other way, right? It's always possible in anything. I don't care if you're an owner of Apple Computer or artwork. I mean, you can always have a big reversal in price on anything out there that you can invest in, including real estate. It's just much easier to chart this kind of stuff than it is the other stuff. So, all right. Point of control, yes, Vladen, good question. We'll get a little more into that. Let's take a period of time. And I know this is going to make some people's heads spin, but I think this is important. I should have actually, let me just, so notice we've drag this over. Now, what I'm going to do is I'm going to overlay just because I wanted you guys to see how this works. If you have trading view or you're considering getting it, here's our fixed range volume profile. So we shrunk down all these candles. We're essentially going to take and click one, and you click all the way over here for a full period of time. Okay. And it overlays the chart on there. So where's the point of control? It's the solid red line. This is where most of the volume is executed since December 17th to now. Okay, so 3 years. Why did I go back this far? Because this is the last time the euro was up in this area. See this right here? It's been a while since the euro is up in this area. And now we're back at that area on a daily. Maybe easier to view all these candles and when you're done with this, if you want to just save it, just click outside the other window and then just send it up to the cloud by clicking that button, and you can expand it out a little bit, which I'm trying to do here. this may be a new concept for many, but in commodities and futures trading, land, equities, this is an exceptionally important indicator. There are some people out there that just trade off volume profile. Now, this is just a volume profile. I'm hoping at some point the TradingView brings in the time-based profile as well. So you'll be able to see what period of time overlaid in a vertical. This can be either put on left or right of the chart, a vertical overlay of the time-based profile, essentially an aggregate of what was the most time it spent at a particular price, just as important as volume. Okay, so there's your little mini class on that. If you want to get into a deeper dive on volume profile, you guys can go to my YouTube channel or Twitter. I've got tons of videos up on my FXES Trader YouTube channel that details a volume profile. Although honestly, I think we'll just leave it at that. I just understand it's an important tool. I don't think you sort of need to do a deep dive or have your head spin off trying to understand how effective this tool will be one way or the other. I would say that it carries more weight in other areas of investment than currencies. Why? Because at this point, I would much prefer a time-based volume profile or a time-based profile than volume. Why? Because I just don't necessarily trust a fragmented volume. And the guys at TradingView would disagree because they're like, oh no, we have got multiple feeds bringing in. But essentially, the problem with this is you're really left up to having and trusting data coming in from the 14 biggest banks that execute this stuff, right? I'm certainly open to willing to get arguments to the counter of that. But right now, I know that if I look at Apple Computer, I know that the vast majority of 99% of Apple stock is then executed through NASDAQ, which is a centralized exchange, right? Where if I was looking through futures markets, most of those are executed through a centralized exchange. John, you just popped in the variable, all of the other Telegram links, they're all in the back office, brother. So go in there, make sure you go through all those videos. It's not a laborious task, folks. I promise you, it is a fantastic, educational, and wonderful experience. So there is the non-masterclass on volume profile. If you guys got any questions on it, certainly I will be addressing this more and more. I do think at a bare minimum, even Granny Smith at age 91, who I have taught, believe it or not, most of this technical analysis to, and she is razor sharp at her age. We talk about this with a rather big equities account I trade for her. So she can actually look to see what's going on as well. It brings a lot of confidence in ownership of anything at certain levels because you can at least understand the macro of the technical analysis component. So how do we apply this? How does this work for me, Steve? How do I make money doing this? Well, you just understand if you can go through all this and learn this type of technical analysis, you're going to be much more armed to make decisions when trade notifications come in. That, my friends, reduces risk. So let me go through a couple of these questions here. Is there anything else I want to address? Do know that you can toggle this off and on. Okay, let me just go back to a daily chart here and span this back out so we can. So our point of control is right here. This is the center point of all volume over the last 3 years, just above 113. All right, point of control, POC, yes, that's the first question we got. Now, Jenna, I don't have any experience with Gearbox yet. I don't have any experience with Arrow. Okay. So I'm open to looking at those. I wanted the, and I don't know, maybe it's just me understanding how software releases go because the vast majority of them that I've dealt with, including charting software, the new releases took a couple of months or more to iron out with almost everything that I've used to trade over the last 10 plus years. So I think that while rightly so, the impatience with getting versions of software out that are really stable are few and far between. I do understand that. So I have not had any issues with VPS changes, so forth, because I wanted them all to get ironed out before I put big accounts to work at this. And that's just a risk standpoint thing with me in terms of stability. So don't hate me, guys, but I was warning about that many, many months ago. All right. But I will be on more of the Arrow. Looks like it's a fantastic product, just like Hawkeye. I just don't have time to sit around and watch manual trading stuff. And I get that manual trading software is not as, I don't know, how should I say it? Not as, how should I put this from a risk standpoint, from an analysis standpoint, somebody that's manually trading, it's hard to gauge what their performance is. Why? Because if you hook up an FX book to the Forex account that's being traded, you don't know if they did take trades or they only took good ones. And, it's like, it's tough to analyze that when you have a strategy, like an Einstein or the overseas versions of Variable or Gearbox, they are taking essentially the trades for you, right? There's you can always go in and manually execute some trades in the account, but 99.99% of our subscribers, unless they're true experts, don't get in there and muddle with the software from that respect. So you can trust those MyFX books. So I would challenge somebody to prove me wrong on this and get me some MyFX books for Arrow and Hawkeye. Okay, so that's a challenge I'll throw out to the group. Happy to share once I vet them out. Remember, when you're giving a MyFX book link to me, I need to be able to see. I'm not going to share with anybody else, obviously, but I do need to be able to see the trades being executed. So the best thing to do is unlock everything, and then log out of the account, share the link with yourself, see how it looks with somebody else viewing it as you logged out, and that'll tell you now whether or not a lot of the information is locked up in there. All right. So to be continued on Arrow. And Alexander, would you like me already been a trade before the breakout? So the problem with that question, Rick, is not in you asking, it's in trying to explain a way around that. So in Alexander, all I'm saying is that, or any of these for that matter, is that when I get the trade alert, I already know what the chart looks like. I mean, I've had these charts just ground into my brain, so I could recite them, standing upside down after half a case of beer, right? But and that's really the key, is just understanding these chart patterns, what you're expecting now that we're in break. But we've extended so much from the breakout on the dollar that we're due for actually a pullback. So now maybe I'm right, maybe I'm wrong. Now maybe the beauty of a martingale strategy can play itself out for the next week, right? So now I'm just bringing another layer of confusion into the analysis process. But once you've had a protracted move like you're seeing the breakout here, you always have a little period of resting, right? Now, unless something comes out politically, Brexit, right? We haven't heard anything about Brexit, so it's probably time for the rumor mill to crank up about that, especially since it's the end of the year. I think everybody's been much more pandemically focused in terms of getting vaccines out and cooling out the population's bananasness over a virus that has an exceptionally low death rate. But in any case, gotta calm the masses down before we sort of get back into trade deals and administration changes and all that other stuff that may or may not be coming down the pike. So there's a lot of unknowns right now, and that's another reason I think you're seeing the dollar sink. I don't see a bailout package 2 coming before the end of the year, but I could be wrong. I just don't see it. There's no impetus for either side coming together on some sort of deal. I just don't see it. They're too far apart. One side wants to bail out this side, one side wants to bail out that. They can't seem to agree on it. So that's just my opinion on what's going on there. But these are all factors you got to take into consideration when you're accepting trades. If you're me and you have raging OCD around win rates, right? It's tough to step in front of the train after the breakout, Rick. Definitely, that's tough, and only because it's all statistics with me, right? It's all about win rates and anything you trade. So let's take a look at USD CHF. I got a question about that. So maybe not as much clarity surrounding this, but let's just see if we can take a closer look. All right, so we're in like totally actually, let me switch to a monthly chart. Yeah, so the last time we saw, you're looking at a monthly chart, by the way, on USD, Swissy here. Last time we saw this area, it's a long time ago. So 14, but this is the big area. Actually, let me just highlight this. So 880, so spot 88081 is where we're more than likely headed. Big support area. Well, some of the biggest in probably the whole decade. Okay, so just know that if we hit this, or more than likely this is going to be an area of magnetism, if you will, for this currency over a period of time. We're almost there. So we'll probably get there and then, either spend some time consolidating down towards that bottom, building a base, or we break through it and zip down, in which case, this is sort of the edge of the cliff right here. So just know that's, jump back to a daily chart on that. Let's see if I can see any further analysis on that. Then immediately our resistance is 8947. That's about 8947. We go back up to that again, we're probably going to bounce down. I don't look at this currency much. I probably should more, but we only have so much brain capacity. So that is, so depending upon, Thomas, I don't know, what software you're using. That's just my view on what's going on with that one. Next question. Hi, Steve, please over how to create an alert on TradingView. I don't have any alerts. I don't have anything set up. So I don't have any kind of alerts at all. I have zero, mostly because I'm just looking at these charts all day, but it's not difficult to create alerts. I don't know how to do it. That seems crazy, huh? Next question is, do you have any thoughts about the impact of GBP on euro pairs in cases of in a case of no deal? Well, if there was a case of no deal, we'd be considerably more going crazy than we are right now. I think a deal will get finished. I think that unfortunately it's just been tabled to a certain degree because of the pandemic. So it is hard to forecast that. More than likely, whatever forecast they give you guys in there to be wrong. Now, GBP, USD, we already talked about that. GBP Euro, I don't look at that much. Let me just add that. I just took it off this morning. Why did I do that? Let's take a look at this dog. Okay, so GBP Euro, still stuck inside the range it's been in for some time. This currency acts quite well. Now, obviously, it didn't during the pandemic, but I mean, historically, look at the trending and/or basing that takes place in this currency. I'm just looking over. Let's look on a weekly chart here. See how it's fairly calm. This actually has one of the larger and the higher win rates inside of variable. So this is a common currency that they use, has over a 70% win rate. This is a big reason that I really recommend you guys get on Tyler and Dasan's calls. These guys do some really deep dives, but it's not like it has to take that much time, because once you get a better feel for how these guys analyze, you're going to be able to zip through their stuff each week. I'm not saying skip the call. I'm just saying you're going to know what currencies have the high win rates, right? And then attach those. And if you have another account or some more diversification, then I'll sell, have different currencies trading in that account, right? Maybe it's more of an experimental. Maybe it's your demo account with some of the other currencies. But I mean, the safest play is always to understand what's going on in charts from me and the other coaches out there on a weekly basis. I'm trying very hard to stick to more macro stuff and just be global with all my assessments and forecasts, many of which will be wrong. Do understand that. But looking at this one right here, we're still stuck inside. It's about a 4,000 pip range, approximately. Maybe not. Looking at I'd say if this breaks above 112 in the price of the pound, I probably would say it's probably gonna rip right to 1330 area. Probably be a given. But we've really held this range quite well. We've poked above it, but you notice we haven't closed a week above it, and that's what's important. Remember, when you daily charts aren't as important, notice the levels are different here, but if you peek your head above a given support or resistance level up or down on any notice we've spent in a arguably pretty solid amount of time basing between these levels for some sort of significant breakout, which may or may not follow. I don't know. The breakouts are usually much more solid, and you'll come back down and hit these lines and bounce again up. Or if you're going short, you'll tear through the bottom, get down and run some stops, run right back up. It'll stop right at the line in many cases. Just knowing that alone and understanding where those levels are, just basically, if you're accepting trades manually as a US subscriber to the software, or if you're getting manual trade alerts from any of our products, Arrow, Hawkeye, some of the other ones be coming down the pike, you'll know the levels that you'd want to have a higher win rate. A little tougher to analyze that in the beginning, but eventually you guys will catch on. I promise. You listen to enough of me droning on every Saturday about this stuff, it will sink in eventually. All right, so if we have sell trades in US and those are unlikely to come back down. So if we have sell trades in Euro USD, those are now unlikely to come back down now. Where they are likely to do is retrace to the area of support. So if we go back to the daily chart, and there's so many people that have been barbecued up here that thought the euro was going down. And I'm talking about institutional traders, a lot of these guys squawking on television. And I always, with a breakup here and such a big move in a short period of time, we're looking at 1, 2, 3, 4, 5, 6, 7 days since the doji, just to make this bigger. See this looks like a little cross right here? It's called a doji. It's an indecision candle. Typically, if something is poked its head above a support or dropped below, or poked its head above a resistance line or dropped its head below the support, usually if there's a doji that forms, that's a little sign of things are just about to tear. And it did. Okay. So an indecision post, and then usually the next few days, it's just a rip in one direction, as we saw. And this is where a lot of people totally got fooled right here, right? So you saw this, the rip's coming, a little bit of a rip starts. Shorts are still pounding on it, right? It's the same for any analysis from a candle perspective. This is just what's called price action. Comes right back down to where that indecision has, and then the shorts are loading up, and then the longs come in from an institutional perspective, they barbecue them. This happens all the time. It's textbook stuff. I love it because it's so easy to catch if you know what you're looking for. But yet so many people step in front of this freight train, which I would not have. Noticed we had what's called one time framing from that point higher. So the candle prints higher highs, higher lows, next higher highs, higher lows, next higher. It's called a one time framing up. I personally, especially on a break from this, I will never accept anything standing in front of the freight train, essentially shorts on this, once we start one time frame. I want it to stop like we did on Friday, right? And arguably, there's not much to read from this candle, but there's a ton to read from these 6 days of movements. Big break, serious resistance, doji prints. Let's see if I can make this bigger. Doji prints right here. We ripped a little bit of a taste of the love for the longs, right? We always call it barbecue in the shorts. And then they come in and try and pound it down, but no, look where it stops. And it stops not only above the previous candle's low, certainly above the midpoint or where the doji closed at, but look what happens the next day. So you can see this just textbook all over the place. It doesn't have to be on a daily chart. It could be on weeklies, a little harder to see, obviously. It could be on 60 minutes, 15 minutes for those trading smaller time frames. There's a really good book out there if you guys want to get a deeper dive into it. It's called Steve Neeson. It's Candlestick. He was the inventor of this long time ago. And it just shows like different patterns of candlestick charts. So you just Google candlestick charts. Look for Steve Neeson's book on Amazon or wherever you buy your books. It's pretty slick stuff, but keep in mind, I'm getting a little deeper into the weeds with everybody than I probably should, because I don't want anybody's head spinning around on this. It's something that needs to come in time, right? It's kind of like when you first start driving a car, your parents are taking you around or whoever's teaching you. You're not immediately going to take a couple of laps and then they're going to drop you in an Indy car and start spinning around a track, right? So you have to take it in baby steps. Let's back to the daily. Man, I got questions piling up here. Thanks for the input, folks. Good stuff. Love it. So we have sell trades in US. So they are likely to come back. Just note they're likely to come back to the resistance points we broke out of, but they'll probably close higher. So you're going to use some of these dojis and this to be right here, the 1920 areas to be your point of retracement. Although I don't see it happening because the dollar sold off. Yeah, I try to stay away from US 30 because it's just going to confuse everybody. And honestly, the win rates with our software trading US 30, I just and maybe they're using this, some of the other coaches on the other software. I don't know, but I try to stay away from US 30, guys. Developers are trading this week, Sean. I don't know that matters any really because they never tell us when they stop anyway. It's rare. US CAD. Let's take a look at that. Next question. Yeah, delete that. CAD. Oh, I've looked at this one this week. Jeez. All right. So we're going to have to go back. October of 18. So we're right at support right there, guys. See that? So let me switch over to weekly. Yeah. Right there. So this is so if you're getting alerts sent to you from potential longs, since we're really stretched here, you could probably accept those for the next couple of days. After that, all bets are off as far as my analysis. See the fake out here? This is on let me get back to the daily here. This was during the pandemic. When was the last time we were at par? 13. February 13 is the last time we were par. Dollar for dollar. Jeez. Canada's a great country, I'll tell you. Super rich in natural resources and fantastic skiing. All right. That's that. CAD. We'll get the next question here. Remember, you guys always want the questions in the Q&A window, please, not the chat window, unless you want other members to answer it. Yeah, there's always a time limit I see on the. There's always some sort of time limit. It's just one. But it's probably not going to be reached before the year end. So I don't necessarily that all bets are off if the deal's not signed. Um, it could be. So Dasan's using Euro GBP. Let me just switch over to that. Okay, so this is just the inverse, guys, of the one I already showed you. So, I mean, it's basically the same analysis, but just flip it upside down. Point is that the currency acts quite well. Now, obviously, if you extrapolate this pandemic period of time, um, it historically, especially from May of this year here, where there's other Brexit-based stuff, that's when it's gone kind of crazy in the past. The question is asked, what is behind the big moves of Euro USD, ECB, Fed? It's an amalgamation of stuff, Paulo. It's everything. It's the central bank's quantitative easing globally, which is nothing more than them throwing cash out of helicopters that hits primary dealer accounts first, and then gets spread out among all the other asset classes. It is bailout packages from countries. Essentially, whoever's issued any kind of bailout has been a devaluing event for your country's underlying currency, right? Especially here in the U.S. Um, but the breaks, I think some of the stuff going on, obviously with pandemic, but the dollar for the most part has been dropping because the debt that this country has taken on and the can kicking down the road, if you will, is been devaluing the currency, thus increasing the values of everything that's been attached to in the short term. You're welcome. Okay, so yeah, it's looks like you guys are getting Telegram channels. That's good. Let me delete this. Next question. I hope they do reach a deal, guys. A lot of European folks, may want one or the other, but I think the UK needs to break away and be their own entity. Hi, Steve. My account is in drawdown. What do you think can do best? So I don't know the answer to that question. I think that with a couple of the emails I got, I have asked the people that have said, hey, after the VPS was switched, I have problems that hit my account with the VPS switch. We are aware of that. We're probably not going to do this again. I can't say that for sure. But what we should do in the future, unless somebody's in significant drawdown or they just vehemently don't want to close their trades, I personally think all trades should be shut down before the VPS update. Even the stuff you're active in, if you're up, obviously it's easier to close the trades down than if your account's in drawdown, right? Because then you're stepping in front of the software and saying things like, "Oh, I'm smarter than the software. I'm just going to turn my trades off." But in many cases, usually the VPS. And keep in mind this, guys, I know it's probably harder to, and we're not necessarily looking for your sympathy, but do understand we have thousands and thousands of subscribers, which is going to just balloon over the next year. And it is imperative that we have a solid and how should I say this? A solid and consistently stable VPS trading these accounts. I break probably from the opinion of much in corporate because I think all of our VPS should be on the AWS servers, plain and simple. Okay. Yes, that will cost more, but the stability is there. I don't know. Maybe it's cost another $10 a month. Who knows? I wouldn't care. I'd pay another 15, right? To have a enterprise level server hosting my MT4. But if you talk to some of the developers with their real high level pieces of software, they'd love to have it on the AWS servers as well. I don't. I do own Amazon, but and that's in my IRA. I do own Amazon in full disclosure, but they just have won the vast majority of global companies' business. They have over half of the S&P 500 corporations on their platform for a reason. So just my 2 cents. Again, I'm going to always try and bring the 2 cents from my standpoint, only from a risk management strategy. But the problem I've seen, and I don't know, this is kind of why I always stay set up in my FX book so I can analyze it for you. But everybody that has come back to me and said, "Why, I had a drawdown took place with this VPS switchover," they've been unable to provide me with their FX book accounts. So I have no idea if they're BSing me or if they're telling the truth. So if you want full and transparent assistance from me, you got to provide me a FX book account that's unlocked so I can see what took place. And in many cases, as I mentioned at the beginning of the call, subscribers had incorrect settings or some sort of cowboy setup that someone in the upper downline had made a recommendation, which we completely do not support, at least in the beginning. Maybe not the answer you wanted here, Kevin, but if you're still in drawdown, depending on the software that you're using, I would not step in front of that. One thing I think that is important, and I talk to financial planning clients, and anytime I have a discussion with friends or family, and I get asked to do financial planning stuff here and there for local support groups, and I went and spoke to a bunch of students at a finance school, a high-level finance school, 2 years ago about financial planning. I said the single best things you guys can do for yourself is to pay yourself first. So if you're working for a company, that's invest in the 401k. Everybody's like, oh, I'm not getting a company match. I'm like, who cares? You're still not paying any tax on what goes into the 401k, which is the same in Europe and other countries. There's that same type of tax advantage. So put that in there first. The company match is great. But outside of that, keep in mind if that's, mostly an equity-based mutual fund portfolio inside that account, over a period of time, the account's going to take a hit, right? But if you have a long-term time frame, just like in 2008, I came across umpteen zillion investors before obviously they hired me that just got clobbered in equities in the correction. I mean, I saw some 401k accounts that got cut in half, mostly because they were all stock based, right? But they still continue to add to the account. Does that make sense? So essentially the account was down 50%, but they still continue to dollar cost average more money into it. Your Forex account should be no different. So just because the account's down doesn't mean you shouldn't be adding money to it. If and only if you cannot afford to lose that, right? Most of the people that have come to me with concerns, and many of them valid, almost 90% of the time I've been able to shake out of them that they couldn't afford to lose the money. So who's at fault there, right? So think about that, All right. Add money to it is what I would suggest if you can afford it. Next question. I already answered that. Excellent. Would you consider Euro GBP? Let's make sure we're on. There we go. Back to the daily. Would you consider Euro GBP trending or sideways on a weekly time frame? So daily, certainly not trending. Okay, because we're bouncing between a very tight range here. So we're balancing, essentially consolidating, whatever you wish to call it. On a daily. On a weekly, we're trending down, as you can see here. Yeah, let them ride it out, Anonymous, on that variable. That's actually not that bad. Okay. And I can even add more to the account if you can afford it. Remember, can you afford it? So I don't know if you guys have ever seen that movie where Kermit the Frog's looking in the mirror as a trader. It's actually a hilarious little video. And he has like the devil side of him as he's looking in the mirror. I see if I can find that because it's actually one of the best videos I've ever seen. Is like a fun joke around risk management. So Kermit's looking in this dark mirror and he sees like this wild and crazy version of himself in the mirror. Guy's got an earring and he's saying Lambos, bro, in the video, just kind of like throw the dice. Let's just try and, make a ton of money in trading so we can buy a bunch of fancy cars, right? And then you have the other version of Kermit in the mirror, that's like, nah, must do risk management. So that helps you guys. Let's see what else we got here. Einstein has Euro, US dollar, USD, JPY, and yours and USD are strongly correlated. Is it not wiser to have a pairing less correlated? Which one? So we've addressed this in many of the stuff back in the spring. Essentially, I prefer inside either Einstein or Alexander to trade a ring. Okay. But it has certainly been solid advice, of which I am in agreement with, to just trade pairs that have a high win rate inside the software. Okay, so one of the higher win rates in Einstein or Alexander is the Euro US dollar. Okay, so you want that to be one. Euro JPY has had a history of bananasness this year, but it actually did pretty well last year. It had a higher win rate. USD JPY, as you guys know, I always try and stay away from that because almost anything attached to the yen, it's hard to chart. Here is the Euro JPY. And there's just not a lot of patterns that are showing here. I mean, we did break from a trend down. Now we're trending up. Now we're trending down. We're trending up on the weekly chart. Monthly, consolidating tight. Daily, trending up. Big resistance area here over a pretty big period of time. It's definitely one of those charts, if you're confident at the data pouring in on the volume on this, which I'm still suspect on, then you can actually drop a fixed range volume profile on. I probably want it to start about right here in time. So your point of control on this is 124 spot 542 is the center point of all volumes since March of 17 that is executed on this currency pair. But I would prefer to have the ring. Answer the question. All right. You guys getting all conversationalist in the chat window. I love it. All accounts have been accessible through any MT4, just not on the VPS. We've had many able to close out trades and profits during that time. That is true. The jury's still out on that, Jay. Personally, I think the UK should break away. That's just me. They're one of the largest economies on this planet. I think they should be autonomous. All right, cool. Yeah, look at this. The fun has lasted so long. We've taken an hour up. Gotta love it. So, anybody got any questions at all on anything? Hey, Steve, how good's your golf game? Hey, it stinks. Anything else? All right, guys, I'm gonna let you go. If you got any questions, anything, if you have extra time today and you're stuck in the house, because the militia's standing out in your front street waiting to arrest you if you leave the house without a mask. Hook up a MyFX book to your account. Make sure you watch Dasan and Tyler's videos. Have a great week, everybody. May the trades be with you.